Friday, September 13th, market analysis, Stan Ehrlich. Good morning. About 10:05 in the morning, California time. We're looking at a rally that's continuing in the stock market indexes, but approaching basically the last vestige of significant resistance and maybe a bullish upside breakout for another leg up, which until Wednesday, I didn't expect to be saying that, but I am, and I have to wake up, see the light, not stick to old opinions, flexibility, etc. I learned that decades ago. So although I am still looking for an October low, the picture is changing a bit. I've got to have some sort of a significant bearish reversal or a rally that fails substantially in order to hold on to the expectation there's not going to be any new highs for the whole trend. And here in about the middle of September, is definitely the approximate time period, September in general, when markets love to top out and go down into October. Again, since 1993, there's only been 3 or 4 occasions when the market didn't have an October rally of any kind whatsoever. Most of the time, you got an opportunity to make some good money buying somewhere in October. Now, that's the trick, of course. What specific day? That's my expertise. And how long it's going to last, how far it's going to go, that kind of thing. But just look at the last couple of years, which is a little unfair. They've been extremely good examples of the market bottoming out in October. And then you can look at October, but also look at August and September and November and December to see if we really had a low of some significance in October, period. Just don't look at October and see if it went up afterwards. That would work sort of. I'll stop there. So we're not quite overbought. We're not even that close. We're up into the same price range that it has topped out before. So it should again, but no signs of it happening so far today. This is the 5-minute chart on the E-mini. We're close to high and last. We are long because Wednesday was a bullish engulfing and it was oversold within the previous few days. Therefore, we had a buy signal, we got long, and here's the trade is doing great. Now, you heard my opinion, which is totally different than what the strategy just did, which is working very well. Next, we were short from on the spider and then got out of a few days ago, thank goodness. But that's the whole point. We got out relatively close to the bottom of the break. We were not oversold, unfortunately, on September 11th because as a result, there's no bullish engulfing here. There's no green bar. There's a minor double bottom. That pretty much has already come to pass. It's already worked. It's already gone up as much as it should have. So I got nothing here. All I have to have is a market that stops rallying and turns down significantly and starts to make lower lows over a couple, 3 days or something. And then I think I'm back on track as far as my October lows are concerned. There's a chance it won't happen again. This could be the number 4 in 30 plus years that it doesn't work. No guarantees. Next chart. Spider, 5-minute, not much, 2-minute, not much to add. Still looking pretty strong at the moment. We're short, got knocked out pretty much on the high of the rally on 3 days ago, but thank goodness. So now we don't have to worry about we're out a lot lower than we are at the moment. Current quote. Next price. I'm at symbol August. Can't talk this morning. QQQ is a new rally highs, but in an area of resistance and at a bear trend line, and a little closer maybe to being overbought, but not quite yet. Now we had a buy signal. We're long. I like that, and I have also moved the stop up, meaning tighten the kicker or shortening the leash, so to speak. So I'm still long, but remember, psychologically, and that's a bad thing, I think it's going to roll over and start to head south. That's why I tighten the stop up. Let's take a look at the details. Here's your buy signal when the market dropped off on September 11th below the previous day's low and was oversold, and then started to rally. And right there at around 9:10 in the morning, California time, it got back to higher than the previous day's close. Excuse me. And we got long. Both the stop for the day trade, which got out near the highs on the close, great. And the longer term trade, the position trade, which is this green trade line going to the current quote right now, double great. I simply didn't see it coming, and that was just me personally. The code did what it was supposed to do. Great. Next is the NASDAQ daily data chart. Pretty much the same story. We got on the 11th of September a bullish engulfing. We were oversold within the allotted number of days back. We got into a position just after we had gotten out of a previous short. Amazing. All automated. I didn't do nothing, just watched. Well, I wrote I developed the code. I didn't write it. And our trailing stop I have adjusted so it's gotten tighter, much, protecting a stop at this point. Great. The reason I tightened the stop up is because I psychologically expecting a top. But if I don't get it, maybe this will just run straight up and it won't matter. If I do get a top, I will have been very happy that I tightened the stop. But you don't have to. You can use the defaults. Track records are based on defaults. The NASDAQ futures contract default, I'm not using at the moment. I've tightened it up a lot, and so you can see how it's been acting since we got in the trade, which is right there. And a couple hours after we got out of our short, no less. That does not happen very often. It's quite rare, but it worked great. Next, Dow did not get a buy signal, did not get oversold, and as a result, there's no green, but on top of that, there's no bullish engulfing. So we just missed in two cases, two criteria, the signal, and the Dow is rallying, of course, but it has a double top that is on the verge of being a triple. Since triples are very rare, you shouldn't really expect them. As a result of that, I think the YM might make new highs for the trend here, and then the media is going to start bragging that the Dow Jones is in new historic highs. So when you hear that kind of news, it's not particularly good because the media always goes yippee at the top and uh-oh at the bottom. YM, short 5-minute data, nothing to add. Bonds, no, this is a Russell. We did, for a change, get a buy signal on the Russell. We are long from the low day, September 11th, and for the last couple of days doing extremely well. I have tightened up the stop, which is now up here at 2162.3. And our current quote is 2184.4. So yippee. Now the short-term chart shows you how the stop has been moving, and we came super close to getting stopped out using the current STS, Smart Trailing Stop Kicker, which I adjusted this morning to make it as tight as I could, and that's why we didn't get hit here. But this is what is capable of doing the automated trading system, exclamation point. So I like what I see, except, it's not stopping. I expected it to stop rallying, and that's it. Now bonds. So far, I'm okay here. The market is making a double top formation, got overbought and stopping at what I think is a new neckline. Later, I'll get into much more detail about that. But I am still expecting, and nothing's really wrong yet. I got a little higher than I thought. I didn't expect a double top, but we may be making one. Nevertheless, a low in this green circle and during October, high to low price range and time to time, date to date. Same thing for the double top potential at resistance in the 10-year notes. Got overbought, dribbling back for a couple of days. Today we're up a little, but not a new high. And I expect to move down to something in this circle. I might even add a little bit higher level, but not too much. Mostly because the clock is ticking, time is waning, and I would have to have a sharper and sharper break if I was going to get down there. Timing, I think, is good for some sort of low, maybe not as low as the circle. Okay, crude energies in general, rallying more, in support, oversold, working nice. Talked about it the day it turned up, even a day or two earlier. But sometimes these things are hard to time and check the right price, both time and price. So good expectation bump against the yellow line, which was the bull trend line across the bottom of a past tense previous pennant and a big one. Again, this could be pretty bearish because that pennant is quite sizable and duration wise in length as well as vertical. So this could be bearish down to all the way down to something like below 60, 58, and even lower over the next several months. Next, natural gas got a buy signal at the bottom of the last low, which was the second low of a double bottom formation. Perfect. Couple of complementary buy signals a few days later. We have a new high for the move since today. Now, I know the current quote's down slightly for a minor reversal. We're not overbought, so I don't expect any significant dip here. And I think it could easily rally up to 2.483, beginning of some resistance, and even higher. If the double bottom has a breakout to the upside, which would be at 2.461, then the upside objective would be at 2.882. Next chart. Heating oil. Oversold in a big, broad support area. Can't get a handle on exactly where I should be putting some fine-tuned support levels, but oversold, starting to rally a little bit, probably back up to about 2.26-ish. Next is the gold market. Now here, gold, silver, platinum has really thrown me for a loop in the last week. Prior to that, I was doing really great. But this rally in the precious metal markets is more than I expected. But there is an important feature I got to mention here. Although this looks like an upside breakout above previous resistance levels, trend lines, et cetera, we did have a sell signal that worked for a little week and we made some money in the trade. But I didn't get a turnaround buy signal. And now we are overbought for the first time. Second day up, I do still think that this could be a trap and it's going to drop off a lot more. But I got to stay with the real historical precedents here. Come back down to the yellow line, hold, start to rally again afterwards would be the bullish story. Or come back close to the line. We overbought, so we could have a downside correction anytime. Last couple of days have been very strong, very quick. So probably exhausting itself a little bit. We'll see what happens. Now, what about silver? It's also overbought, and I'll jump to platinum also overbought. I'm going to go back to silver. So those are two reasons, silver and platinum, to believe that maybe we're going to have the beginning of a downside correction or a continuation of the longer term downside swing. And if it is really a continuation and we get a lot lower and start getting below, in particular, 28, then the head and shoulder top concept is still majorly in play, if that good grammar or not. But the point is, right here, overbought, I'm expecting a bit of a dip, depends on how big I get. If it only dips back a little and starts to work its way higher again, this head and shoulder didn't work completely correctly. It got down a little over half of its minimum downside objective, and then all of a sudden I got a new buy signal. Granted, I can brag it was at the bottom of the move, but I didn't expect this to produce much more of a rally than it ended up doing. And then I thought we were going to make new lows completely and get to my objective. And that was about the time period, of course, of early September. But these last 2 days in particular have flipped me a little bit. I'm going to go neutral basically, but my bias is bearish and I'm overbought. So we'll see what the next few trading days bring. And I got to say the same thing in platinum. And that's a little depressing because head and shoulders is my favorite pattern. And I know them pretty damn well. And this is not doing what it usually does. So that's the problem. You never can make the market do what you want it to do. You always have to move with it. Next, copper. Kind of a double bottom, not the best one I've ever seen. Buy signal on the low right there, and a buy signal real close to the other previous low, the earlier one, August 12th. So that's nice. New high for the rally so far in the last week and a half. That's nice. So I am expecting this double bottom to pan out. So far, so good. Resistance is at the breakout level, and that would be at 4.32. But closing above that into, I know it, a resistance level, still I think would push through it and get to my minimum upside objective or more than this 4.6 plus. We'll see how this works out. So far, the double bottom looks reasonable, and I love the fact that there's a buy signal on both lows, basically. Okay, green, beans, buy signal worked out okay. I could have slowed down, past tense, 2020 hindsight, the rate at which the trailing stop moves and bypass this little dip. Instead, we chose to leave it alone. The stop got hit. We made a profit in 2 days, but depends upon whether you're an investor type, a long-term trader, swing trader, or short-term scalping as to what kind of a stop you want to use. Totally flexible. It's not a moving average. I keep telling you that. A combination of a couple significant other features. We got a bear signal on the top of the rally on beans. I'm not sure why we didn't get a trade here, but I'm liking this because it's with the overall longer term trend, which is your friend. Trend is your friend. And that's very true. That's why moving averages were invented. And I don't like moving averages. They're built to be late. They'll never get you on the high or low day, even exponential moving averages or short-term crossovers and so on. They're always a little bit late. So I think beans may have hit a top in a resistance area a couple days ago and starting to slip down. Oil, bean oil. Nothing here. We do have an outside trading range, but it is an outside down day, implying it's going to sink even more. Now, the last signal was a buy signal. It did very well. We managed to get out on the high day, albeit relatively close to the low. But look what happened next. So we're happy to be out on that day. Could have done a little bit better, I suppose. The entries are what I love so much. They really are great, but the exits are flexible so the user can make mistakes on their own, so to speak, or maybe do better than the default exit input, they're called. So I'm basically bearish in grains, trying to justify some kind of a bullish situation, not particularly succeeding in that, looking for a test of lows here and probable new lows, period. Soybean meal, I got to go the same route. Got up, got overbought, hit some trend lines, starting to slip. Today a little lower on the day. Could have a bearish engulfing. And if that does happen, and we have an outside down day, this should turn red and be an actual sell signal. I don't see it happening, but it could. Next chart. We're pretty much on a strength here in corn, up against resistance. Interesting, the high of the wick, the high of the day, bumped right up against that resistance level very accurately for the third time in about a week and a half. And the time it got above into resistance, it had a bearish engulfing, which worked fairly well for a few days. There's a bullish engulfing yesterday. We got a little rally today, but again, the longer term picture is primary and it's bearish. And we're up against resistance. So I think it's going to turn down and make new lows to the trend again. Wheat. Bottom buy signal to the exact day. Now, wheat, since 2.5 years ago or so, the war began, has been going down, downtrend. We got a sell signal. I got to remind you on the exact high day, I believe that was March 8th of 22. Perfect. Unbelievable. Please remember it was going limit up bid, in some cases locked limit up on the opening, if you know what we talk about in commodity language, lingo. And that is the strongest, the quickest, the fastest you can get is opening limit up and locking there all day long. And we sold the high day, got a signal on the, okay, enough. And now so far the low day green, but again, resistance trending sideways lower. I'm bearish, looking for new lows. I think it's about to top out. We are just in the last couple of days, and again today and yesterday gotten overbought. There's a little bit of a room for a little more rally, but nah. Next, double bottom in cattle. So far, so good. New high since the spike bottom, real long wick there, happened to create the double bottom. So today's another new high. Currently up a small amount, no big deal. I'm looking for a break of these or a minimum, a test of these lines. But if I get up to there, you're going to be breaking out of the double bottom formation, which has a minimum upside objective of 186.50-ish and maybe more. But that's approaching some major resistance. Next, Miss Piggy got up to resistance, got overbought, had a little bit of a standard, which I don't trust much, but this one worked. A reversal. That's a higher high and a lower close. And that happened. And now we're coming down, mostly because the resistance level and the overbought is what I like to talk about. So I think it's about to make another new low, looking for lower levels. Here we go. Back to the E-mini. Almost high and last. Checking the short term. Right up there, trying to make new highs. No sign yet of it rolling over. I need to get some kind of a big break here. Ain't happening. It's not like we're up a lot, 3.5, okay? Yeah, it's almost exactly. It's 35 in the E-mini. So have a great weekend and profitable trading to you.